about so much. First up, he's a legend on our Stocktwits community. He's always there to help out if you have a question. He never stops trading. He's trading like 24 hours a day. The only man to post about lean hogs in the VXW chat room. He is, of course, FLE. Join me coming up right now for some fascinating insight from FLE.
Every day that I wake up, I have a mantra. As soon as I regain consciousness, I say, Justin, let's make some good decisions today, all right? And that's what I try to base my life on, is just go through the day making good decisions.
I guess that's all you can really do.
It works well, you know?
Where did you get FLE from?
It's initials of my firm in Mauritius. It's Financial and Legal Engineering. Yes, my love. Do you see me here, Dave?
I can see you.
Yeah? Here's my beautiful wife, Valentina.
Hello, nice to meet
I'm
you.
with Dave. Do you have a video cam, man?
I'm sorry?
Can you show yourself on video or not?
Yeah, can you see me?
No, I can't.
Oh, that's weird because I am broadcasting.
Okay, because I just see your photo. I think you set up Skype improperly to send a video.
Oh, I apologize. I thought I was broadcasting. That's probably why I was not able to get picture-in-picture display.
Yeah.
I'll have to redo that.
That's all right. No worries. No worries. Don't kill yourself about technical shit right now. So let's. FLE.
Did you do a lot of trading today?
Here, just let me get back to your question.
Okay.
FLE. That's just the initials of my firm in Mauritius, which is called the Financial and Legal Engineering. And this firm undertakes everything that I explained to you yesterday, notably putting together legal and operational infrastructure for small to mid-size asset managers, as well as doing bespoke work in legal and financial engineering for various other people. For example, like I said yesterday, we're working for these guys in the Middle East who are putting together a financing branch for some energy projects. So it's legal work, you know. There you go.
Well, I did go about looking up securitization.
Okay.
After we talked.
Yeah.
And I understood it correctly.
Hey, it's not rocket science. It's just a pain in the ass.
So why did you base your firm in Mauritius? Is that some sort of strategic?
Yeah, for sure. It's politically neutral because nobody has an axe to grind against Mauritius at all. It's a tax haven, to be quite frank. And the guys that work over there, actually, it was one of my mates from Merrill Lynch who introduced me to Mauritius as an offshore jurisdiction. Previously, I'd had all my clients to the Caymans and Bermuda and so forth. But then I had one of my mates who was at Merrill Lynch for about 15 years in Paris. And he started his own firm in Mauritius. And he kind of caught me onto it. And I love Mauritius for several reasons. First of all, zero tax. Well, actually, I have a regulated firm in Mauritius. So I'm under a little bit of regulation. So I do pay a bit of tax. Like I pay almost 0.5% a year. It's terrible.
Oh, that's really terrible. Yeah.
But also the guys who work there are really diligent people. They're it's a mix of Indian, British, and French culture on the island, because it used to be a French colony, then an English colony, then an independent state, and so they've kept the best of all worlds. Really, they've kept the best of the Indians' capacity to work like hell for fucking peanuts. They've kept the French administration, which is very strict and proper, and they've kept the open-mindedness of the English. So these guys are affordable, professional, knowledgeable, and diligent in everything. And I love working in the Mauritius. And it's no problem to get in contact directly with the head honchos, like the Minister of Finance or whoever you need be. Like,
oh, really? That's interesting.
in a small jurisdiction like that, it's no problem. Try getting the Secretary of State or the Secretary of Treasury on your mobile telephone from the US or France or Germany or England. It's not going to happen. When you're dealing with the Mauritius, however, little tiny states like this, their whole business plan is on guys like me. And even a minister will reply to a telephone call from me. It's amazing.
That is amazing.
Yeah.
Now, do you actually go there?
Almost never.
Often?
Almost never.
Almost never. I just wanted to retouch again on your background that we talked about last time, as far as your beginnings in Vancouver.
Yeah.
And then moving to Europe.
Yeah. That was it.
So you started trading at a pretty young age. How old were you?
I just got out of the army, actually. So I was in my very, very early 20s. And I started trading foreign exchange at a brokerage/management firm based in Vancouver, British Columbia, Canada. And it was very fun and exciting. I learned a hell of a lot, but like I told you, I was the only white guy in the office. Everybody else was Chinese. Even my mate who introduced me to the place. And
that's amazing.
Yeah, so everybody's speaking Chinese all the time, and I had to fight to. And I was a very young guy, most of the guys there were at least 30 years old, and I was like this young white guy. So they basically just ignored me most of the time. And then some of the time when I'd offer them a tea or a cigarette or something, I'd get some information out of them and learn more and more about the business. But it was fucking tough going, especially back then. We had no internet. I just had some books at the library or whatever, and this ephemeral information from these Chinese guys from time to time,
Now, what was the exchange like there? Was it like a floor?
Well, foreign exchange has never been centralized or on a open outcry. It was all telephones. We had our Reuters machines with quotes, bid and ask on Deutschmark and all the currencies, and we'd have just direct telephones to everybody and their dog all over the world who wanted to deal with us. We had a Reuters computer that had charts on it, so that's how I learned how to start looking at charts. That was very interesting.
I've seen that pictured before, currency traders on the phones.
Yeah, that's right. Because
back in the day,
yeah, it was not at all like a market maker on the floor of a U.S. options exchange. It was it was from the onset a truly global exchange. It was completely, and it still is completely OTC. And back then we didn't have the internet or any multilateral, what do you call them, exchanges. I have a name for it in the US and a different name for it in Europe. But the centralized exchanges where we have FX and other OTC products, we didn't have that back then. We just had the bloody fucking telephone number and a list of 20 guys to call to buy or sell.
So you were generally trading currency pairs, is that it?
Exclusively.
Yeah.
Yeah. Yeah.
So the yen.
But back then we didn't have the euro. It was pre-euro, so we had all the European currencies, notably the Deutschmark, of course, which was a big one. Swiss franc, the yen, spot FX, over the telephone, like in the good old days.
Now you had some sort of clearing firm. How did the financial structure work for that? Did you have to put up a certain amount?
Well, actually, I was hired to manage some money, which I thought was pretty fucking crazy of these guys. But after a few weeks, my mate, he showed me how to make a bit of money, and I could do it more or less like half the time kind of thing, you know. And so I thought, fuck, this is pretty good. If I practice, I'll get better. So I put in some of my own capital as well. I managed to scrape together 10,000 Canadian dollars at the time, and started trading as well my own capital, as well as capital. I was delegated a portion of the client's capital, and yeah, I traded it. I mean, these guys probably now retrospectively, I know for a fact they didn't give a fuck about the performance. All they wanted was commissions, because back then spreads on FX were 10 pips wide. 10, count them.
Oh, wow.
10 pips wide, okay? For comparison's sake, today, I would not deal with anybody on the planet who would not give me a bid-ask spread of, you know, under 1 pip. Under 1 pip on a major currency anyway. And back then it was 10 pips, so I could, now retrospectively, I can understand why these guys would hire me just to, you know, generate turnover.
Now, if I can just, I don't know all that much about currencies. How much did a pip represent in dollar terms?
Well, back then we didn't have any mini contracts or anything bite size for retail clients like we do today. Back then, we were dealing in minimum contracts of 10 million base currency in a major currency, except for the yen, it was times 100. So it would be, what was that, 100 million yen minimum. So, you know, we're dealing with chunky, essentially, well, they're forward contracts, right? Because they're not centrally exchange listed, we don't call them futures, but they're essentially a futures contract, but OTC, so we call them forward contracts or spot contracts. They're only 2 days out. The expiry date is always 2 days out. So it's a very short-term contract, and settlement is J+2. Still operates that way, but the size back then, man, it was massive. It was like $1 million per contract. So you had to go in with a bit of size, and
if you're saying the spreads were that wide, that's huge.
It's massive, man. But okay, on the other side, to compensate a little bit, the markets were far more volatile back then as well. So, you know, in a volatile market, you can expect or even accept or be happy with a wider spread, but they weren't all that volatile as to justify that 10 pip wide spread, like, not at all, okay? I mean, today, if somebody proposed me that, I'd seriously tell them to go stuff themselves.
Yeah, no doubt.
Yeah.
So, okay, so you and I met in Stocktwits.
Yeah, that was fun, wasn't it?
UVXY. And
how did we start contacting each other or exchanging ideas or whatever? Do you recall?
I don't really remember.
I don't. I just remember seeing you around a lot, saying a lot of intelligent things and making pertinent points and so forth. And so that's why I started following you and kept upon your trail.
Well, it's a unique spot, Stocktwits, in that there's an interesting mix of mostly beginners and a few people that know what's going on, sort of.
Yeah.
So you kind of have to shake out the wheat from the chaff, as it were. So anyways, I don't want to get sidetracked too much. I want to continue for a second with your history as far as coming from Vancouver.
Mm-hmm.
Because I know that you are a lawyer.
Yeah. Okay. So, yeah, I mean, just to explain the brief of my life is almost a novel in itself, and I don't want to go into too much ridiculous detail. But when I spent a couple of years trading on an FX desk in Vancouver. I wasn't really getting ahead. I wasn't very good back then at all. Okay, and my main ambition in life since I was about probably 8 years old was to become a lawyer. And since I had previously lived in France and quit school when I was really young, I went back to France and I went to law school. And in France, there's a unique opportunity in law, which is called the capacité en droit. And you don't have to have any diploma to get into it. It's an extra 2 years for the whole curriculum. But any bum can, any slob off the street has a shot at going to law school for free in France via the capacité en droit. And it was really exciting for me because I was basically in that category from a scholarly point of view anyway. And I pulled it off. We started out, first day was 2,000 of us. Over 4 years, 12 of us were left. And I specialized in financial market law because I had this background in trading FX. And as I was going through law school, I was also continuing to trade my own portfolio. And so that my relationship with financial markets and law has always been one. I specialized in financial market law. My legal business has always been around financial markets, either as an employee or now since several years as an entrepreneur. And so law and trading financial markets is just where I've come to. It's the apex of my background, my education, everything I look to build for myself.
Well, that's fascinating, and it really makes you unique as a trader to have both those disciplines.
And it's great for
the other thing I noticed
too.
Is that you trade a vast variety of products.
And what I think, Dave, as you may have learned throughout the years yourself, a bit of diversity is fucking good, you know? If you're trading a single instrument all the time, there's going to be lulls and really shit periods where it's not even worth your while. So I've opted to trade volatility across all asset classes, and I love commodities for many reasons. So I always have my fingers in several pies at the same time. For example, right now, I'm short Japanese volatility on the Nikkei. I'm short natural gas volatility on NYMEX in the US, in New York. Short crude oil in New York. Short the Eurostoxx volatility index in Europe. And shorts a little bit of FX in tiny size, odd CAD and dollar Swiss and so forth. But I think the main reason that I'm so comfortable doing all that is that I learned how to trade volatility before these, what I call pre-packaged volatility products like UVXY and SVXY and so forth. Because prior to these wonderful ETFs, volatility traders had to actually learn how to trade options. You know, think about it.
Right.
And now,
I come from a similar background to you in that regard.
You know what I'm talking about. Whereas, you know, possibly, dare I to say, 80%, possibly 90% of the guys that we see on the board trading these volatility ETFs, they think they're volatility traders, and you know, at the end of the day, they are, but they don't understand anything under the hood.
And it's going to blow up in their face at some point.
Well, maybe that's not even my point. The point is that volatility trading has got to be, in my opinion, the most complex trading class on the planet. And you have to know what's happening under the hood to really appreciate it and do it well, generally speaking, except in 2017 where any idiot could have sold vol and made a killing. But I mean, I almost feel sorry for these guys who are like trading volatility. They think they're actually volatility traders, but they don't know what's under the hood. They don't know. Some of these guys have never traded an option, and they've been trading these volatility ETFs for 2, 3, 4, 5 years.
Yeah, it is amazing.
Yeah,
I was taught
yeah.
that as far as graphing goes, historical volatility charts trumped technical analysis of stock charts the way I was taught. I was taught that you determine where in the historical vol range a stock or an instrument is, and if you're in the middle, you have a small position. If you're at one of the extremes, you start to build a position.
Yeah.
Because volatility reverts to the mean, usually.
I kind of half agree with you. I mean, volatility trumps most things insofar as the options traders tend to be the most intelligent guys in the room. Okay, there's no question about it. The other guys are shitting against the wall with their stochastics and their MACDs and their news reports and so forth. The volatility traders, the big edge that they have is that they're taking on all this risk, and if they're not measuring it in a very, very sophisticated manner, they're not going to survive. And many of them do survive. That means they do manage it in a sophisticated manner, and the data that they provide us with, notably, deltas and applied volatility and everything, is a goldmine of opportunity if you know how to read into it. But it takes a hell of a long time to study, that's for sure, right?
Now, the general principle that a lot of people seem to agree with is that fear is overpriced.
It must be. It has to be.
Yeah.
Yeah.
And thus, the being short premium in the end statistically is a winner.
That is a sound principle that is generally reflected in market prices, definitely, and that's why I opt to sell volatility, indeed, because that is the essence of our edge as a volatility trader, notably as a volatility seller, of course.
I mean, if you look at the actual volatility of the let's say the SPY right now, it is a lot lower than implied volatility, and it is almost always.
Yeah, and that's the nature of the business, man. I mean, imagine if your insurance company were to charge you only the actual realized risk premiums. They'd be out of business.
Yeah.
They have to price in higher risk compared to actualized risk. Otherwise, they'd be out of business. Just like me and you, we sell volatility like hell. It's a form of insurance contract to either a holder of an S&P contract, or in my case, Nikkei contract, or whatever we were selling vol on. We have to charge more, otherwise it's not a viable business model on one hand. Just like the insurers cannot go and charge just what's the real expected risk. They have to charge us a premium. And that's how we make money. Furthermore, and this is more interesting possibly, is that if the premiums are not higher than the realized risk, then you don't have any insurers coming to the table to insure your shit.
Right, that makes sense.
Right?
Now, in your opinion, are there times when volatility is a buy?
So rarely, man. So fucking rarely. I mean, I think the only time I've been trading volatility for 15 plus years. Well, I started dabbling in it more than 15 years ago, and I started getting a bit serious 15 years ago, and really serious over the past 10 years. And I feel like I'm more and more serious by the year and by the month and even by the week. But I have gone long premium in my stupid past a lot, okay? And progressively, it's like, yuck. yuck, yuck, yuck. And the last time I did it was actually not too recent, not too long ago. It was, you probably recall this. I was buying the hell out of straddles on European and US indices about, well, that period when the VIX hit the 8 and change or whatever, way down there. And I thought, okay, if there's any fucking time that I'll buy volatility, it's now. And you know what? I went out and I invested a shitload of money in long volatility on the CAC 40 in Paris, Euro Stocks 50, the DAX in Germany, SPY in the US, okay, because they were all like record low volatility levels. I worked on those vol positions for 2 fucking months, and you know what? I made beer money out of it. I made fucking beer money out of it. For all that work.
Yeah, I was curious as to how that worked out. It's tough.
It was tough, man. It's grinding. It's like working in a fucking coal mine. It's hell. It's I was grinding out sometimes as little as like $200 a day. Oh my god.
Now, for me, having worked as a market maker in equities, there were certain times when we knew a customer's habits, and so we would buy premium to basically to have bullets to sell to somebody else we knew was coming in, or we would take it down so low.
But it's not comparable because
we knew we could get out of it.
Yes. Let me just stop you there. I appreciate that entirely. If you have, you had to pay a seat at the exchange, or at least lease a seat if you weren't the owner, and that cost you a pretty penny. In exchange, you'd get almost zero commissions, basically, and you'd have the monopoly of providing a spread, okay? I don't have that advantage, man. And if you don't have that advantage, I don't think you can make any money going on premium.
That makes sense.
You know? It's like selling the hell out of UVXY. We have massive headwind against this instrument, so we know it's going down over the long haul. So, but I mean, not a little bit, a lot. Massive headwind against this instrument. And just like the market makers at the exchange back in your day, I may add, had a massive advantage because you could control a lot of the inputs into the skew and everything, as well as your spread for the most part, unless a few guys jumped ahead of you, but that was probably generally not a big deal. Whereas these days, if you want to be a market maker, good luck, man. You got to deal with like tight spreads and a lot of
penny-wide spreads.
Oh yeah, and a lot of other guys who are far better than you and have better technology and who are faster and have more money to spend on everything. And
also the order providers, they want to internalize the order flow. So they bring you a juicy trade and they want 90% of it themselves.
Correct.
Or the whole thing themselves.
Exactly. So, I mean,
so it's tough.
Unless you're some fucking magician like Virtue these days, market making doesn't even have any advantages to it, really, unless you're willing to cough up. I don't know. What do you think it would cost to put together a excellent market making firm on derivatives in Chicago these days? Got to put up what, 20 million minimum?
I don't know if it's worth it, really.
Yeah. Even if you have the cash, is it really worth it? Because it's so goddamn competitive.
Because if it was worth it, you could find the cash.
Yeah.
But you don't have the bid-ask spread, like you said.
Yeah, exactly.
Which was the free money that we would get every month of just these little trades on the bid-ask spread.
That's right.
And you can't really move markets.
No.
Back in my time, if somebody said, I want to sell you 200 contracts, okay, we'll buy 10 at this price. We'll move down 50 cents.
Yeah.
And we'll fill you down there. And we were able to move markets.
Yeah.
But nowadays, also with the event of multiple listing, where several exchanges have the same products, it's very difficult to get stuff done.
I imagine so, yeah. Yeah, there's so much competition, which is good. I appreciate that. But
It's good for us as retail guys.
yeah, oh, excellent. Yeah. I mean, well, I'm not on the retail spectrum of the things, but I am a market taker all the same. And yeah, it's great for us. I mean, the commissions are nothing. The spreads are nothing on pretty well everything I trade on. It's just wonderful, wonderful. Liquid, tight spreads. Commissions are negligible. Back 20 years ago, it was like, oh, it's a big deal to put on a trade because it's going to cost a bit of money, you know?
I really wonder how they're able to do it, market maker firms these days.
Well, oh my.
I guess they manage their risk across vast portfolios.
I think they basically do, well, I have actually met several of these modern market makers, notably Virtue in London. I was over their offices just last year. And first of all, they have really, really bright guys, really, really well-educated quants who know their shit very well. They have, their whole team is basically born and bred in the city of London, and with guys from MIT and the best of the best from everywhere. And they have loads of capital, loads of money. They have so much money. Their performance, actually, as traders, they're really shit. They're actually really shit. But they manage to eke out such a stupid, low-risk probability trade every day on massive amounts of money that feeds all of the 35 guys in the firm. You know?
Well, I would want to be making my own money for the firm, you know.
But it's ridiculous what they're doing. They deploy so much capital to make, if I may say so, really little money. I mean, small returns. They make small, minuscule returns every day, and that's their business model. Ah, merci beaucoup.
Oh, nice.
So, Valentina.
I want to eat.
You want to eat?
Yes. Sure.
Okay. Bon appétit. Merci beaucoup. So, dinner is served.
Excellent. Well, I'm actually going to let you go because I have somewhere I have to be, unfortunately.
All right. But Dave, did I answer some interesting questions for you?
I think so.
Yeah?
I think it would be interesting to people.
Okay, good.
I think that people are very curious as to what sort of real traders do and think about things.
Yeah.
Because it seems like so much stuff online are these people trying to sell you training services.
That's correct.
Or sort of guru services.
Yeah, that's absolutely true. For sure.
And you have no axe to grind here with me, and I have no axe to grind here with you.
Sorry,
so you get the real thing.
Let me hang up and call you right back once again.
Okay. Is that better?
Yeah, it's better.
Yeah, so what I was thinking is I would sort of edit together some of your responses.
All right.
And send it to you, and you can take a look at it.
Perfect, man.
Like that?
Yeah.
Does that sound good?
As you like.
I apologize for disappearing this morning.
No, it's okay.
And appreciate you giving me a little bit of your time.
No, this is a bit of luxury for me as well, because I'm here all day with my business partners, with my associates, my family, the markets, and it's kind of nice to just be able to get things off my mind like this, speaking to you.
Well, I can speak for a lot of people on our Stocktwits group where you're one of the most respected people, and I know a lot of people are interested in what you have to say about stuff.
Well, that's extremely flattering. And I appreciate that sincerely. and I think it's I think I see that. I don't want to be overly what do you call it, modest. I appreciate the responses and the nice words I receive on this Stocktwits, and but I think I've earned it as well, you know.
Yeah. I mean, it's an awesome community.
Yeah, it's really cool, and if I'm respected, that's great, and I believe I am from what I see myself, you know. But there's a counterparty to it. There's working like hell. Not only I'm taking care of a legal firm, a family, my fund here, trading like hell, day and night, from time to time. Sometimes I take it a bit easy, but as you've seen lately, since the Nikkei peaked, I've been trading like hell, day and night. And
yeah, you never sleep.
Yeah, and I still managed to take the time to share some information with people, and I really enjoy that. It's fun to share ideas with, share my experience as I'm living it with, you know, with people, and so if people like that, I'm really happy.
Well, I know it's certainly appreciated.
Good.
All right, thanks very much.
Hey, David, great speaking to you again. Let's do it soon, anytime.
Yes, and I will have the camera fixed next time so you can see me at the same time. It will make it a little bit easier.
Okay, no problem. Anyway, looking forward to speaking to you again soon, Dave. All right?
All right, thank you very much.
Okay, cheers, bye.
Cheers. You know, it's kind of hard to figure out what to do the first couple of interviews. I'm really grateful that these guys even let me interview them because I basically have no portfolio or credentials. But they were kind enough to let me. I did kind of know FLE from the board. We've talked a lot. David Modell I've just met, and he seems like a delightful guy. Actually, they're both sweethearts. So we'll see how it turns out. I checked, and it looks like I did actually press the record button okay. But beyond that, I'm going to have to see if I can kind of stitch something together with these, and we'll see how it turns out.